Hello guys, welcome back to our channel. It's Sachi. You're welcome to Sachi FOREX. It's my pleasure to welcome you to this platform. To our new subscribers, we say thank you for subscribing to our channel. What we do on this channel is that we make a research on how to trade the financial market, and then we come here to show you how you can leverage on this research by practicing on your demo account, and after full understanding of it, you can get to fund and trade your live account. So we are here to make and to reduce your stress of scrambling for strategies that work. So we take the burden of doing that, and then we share with you possible way that you can capitalize on in order to take advantage of the financial market. So please, if this is your first time of coming across our video, you have 2 more steps to go. Like our video, drop your question in the comment section, and then subscribe to our channel, and do not forget to turn on the notification bell so that you be the first to get notified whenever we publish our new video. I also like to encourage you, in order for you to get an overview and in-depth of what we are doing on this channel. The videos are built on a foundation that was laid on previous videos. So I encourage you that you take your time to go through previous videos so that you can understand some basic things. Okay, so today we want to look at how to buy boom 1000, boom 500, and boom 300. How to buy boom 1000, how to buy boom 500, and boom 300. That is what we are looking at today. Okay, and if you look at my chart, I have 3 basic indicator windows. Three basic indicator window. This is indicator window 1. Okay, this is indicator window 2, and this is indicator window 3. All these are put together in order to help us to analyze and make a good choice when it comes to our entry decision. Okay, for those of us who have been following, we say it whenever price is at this green line up here, we refer to it as our upper Bollinger Band, and we say it is an exhaustion point for a buy. And then this lower Bollinger Band is an exhaustion point for a sell. Okay, and then this middle Bollinger Band that you are seeing like this middle Bollinger Band is our reversal. If you are looking for a reversal signal, your focus should be on the middle Bollinger Band, which is the one you are seeing over there, this line. Okay, this is for trend continuation. Okay, and then this is for a reversal, possible price reversal. We are not saying it is mandatory, but we know that whenever price begin to pierces it outward, we know that price is about to make a reversal, and the same is applicable to this. Price begin to pierce through this, we know that a reversal is imminent. So in order for us and also have our moving average 10, which triggers our entry point. Okay, in our indicator window 1, we have MACD and RSI 14, which is relative strength index. Alright, for the relative strength index, the line is set to our indicator background, but in this video we'll be making reference to this number, the number you are seeing here, before excluding the MACD. Okay, let me do something like this. Let's assume that this MACD is closed. Okay, let's assume that this is not there. Okay, so this number you are seeing now, which is 55.29, is the number we are making reference to. That's the number we are making reference to. Whenever we are mentioning RSI, Relative Strength Index, we are referring to this number, 55.23. Okay, as part of our checklist to taking our trade. Okay, and then we have indicator window 2, indicator window 2, as the case may be. And this is where we have our stochastic oscillator and our moving average 10. Okay, so let's dive into this. So number one, what do we do? Number one, we want to establish the trend. We want to know what is the trend of the market. And as you can see, you will agree with me that this market is in an uptrend, because the market is making a series of higher low, higher low, higher low, okay, higher high, higher high, and higher high. So we are basically in an uptrend. Okay, higher low, higher low, higher low, we have higher high, higher high. So all of these structural points, this is a structural point, this is a structural point, this is a structural point, is what price action will draw a trend line for it and tell you that, oh, the market is on an uptrend, and whenever the market pulls back, that you can buy from this trend line. That is it for price action. Okay, now with the aid of a trend line, price action is good to go. You can see it. Oh my god, good. So you can see the trend line, which shows that whenever you see price pull it, you buy to the upside. Why? Because it is in an uptrend. Okay, but these are structural points. These are structural points. Okay, higher high, lower low. Alright, so having established that we are in an uptrend because we are having a series of higher high and then higher low, what next do we do? And then another easiest way for us to establish the trend is that we want to see price being above the upper Bollinger Band. Price being above the middle Bollinger Band, which is this that you are seeing here. Price is above it, so it's an indication that we are in an uptrend. Now this analysis is for those who want to make entries on 15 minutes and 5 minutes. If your entries is going to be on 15 minutes and 5 minutes, this analysis should be done for 1 hour. And having done this, we will now move to our M5. Okay, and this is our M5. And on this M5, first of all, for a reversal for a reversal, we want to see that price, first of all, we want to see that price is piercing the lower Bollinger Band. That is condition number one. We have established the trend from the H1. Now we want to make our entry on a lower time frame. So we want to establish that price is piercing the lower Bollinger Band. You can see how price is piercing that green line. Then number two, we have double confirmation here. You can see this red line you are seeing here, this particular red line. Okay, price is piercing the lower Bollinger Band. That is one. Then this red line you are seeing from our 1 hour, you see that that is our trend line. It's our trend line, which shows that actually price is at a structural point. And because we are in an uptrend, we can buy at a structural point of an uptrend. Okay, then that is confirmation number two. And then when you look at our indicator window 1, our MACD should be at the level of 10. Our MACD histogram line, this red vertical lines you are seeing is the MACD histogram line. It should be at the level of 10. Okay, which is basically what we are seeing here. That is one. Then there are two confirmations again at this point. You can see our indicator at this point, it is not on 10, but there is a divergence. Divergence is the market is making lower low, indicator is making higher high. So it's making a higher low, higher low. So what that means is that a reversal is imminent. You can watch our previous video on this channel on what divergence is all about. And then having established this double confirmation as well, they will now wait for our stochastics to come to the level of 10, and then our moving average 10 also, and the stochastics should meet at this level of 10 together, which has been established. Having established that they are this level of 10, we want to see a cross between the stochastics and the exponential moving average 10. Now we want to see that the exponential moving average 10 is forming a cover, just as it is a cover for the stochastic. And having established this cross, you can see it. Okay, you will make your first entry having confirmed this. Now listen to this. If you are to go with a lot size of, let's say, 0.3, you can divide it into two. Okay, first of all, you go with 0.2 or 0.1 as the case may be, or better still, that is, if you cannot wait for a confirmation to be clear enough, but if you are patient enough and you are waiting for a confirmation, all you need to do is you wait for this cross, then you wait for this first spike to happen, then you wait for the second spike to happen. Now after the second spike has happened, you wait for price to pull back to the moving average 10. And then once price has pierced the moving average 10, you now make your entry. You will buy. Your stop loss is at this previous low. You have your stop loss at the previous low, then your take profit can be at any point of your choice. And then you allow the market to do its things in its own way. The same pattern, the same method is applicable for M15, for an M15 time frame. Okay, it has been established that the market is in an uptrend. Alright, so having established that the market is an uptrend, we will now wait to see how it is happening. Remember, we said there is always a trend continuation using the middle Bollinger Band, and this is a typical example of a continuation. What the continuation means is that price return from the upper Bollinger Band, sold back to our middle Bollinger Band, which is the green line you are seeing inside here. When price pushed forward, you can see that price at the same time is at a structural point looking at our trend line. And it's not just because of the trend line, but from the 1 hour, from our markout, is at a higher low, which is a discount point for us to make a buy. And then having established that, you will also see that our histogram line of the MACD is piercing the RSI level of 10, and then you can also come to indicator window 2 and see the agreement between the stochastics and the moving average 10 crossing each other, and then the moving average 10 forming a cover for the stochastics. Then the price spike above here, you make your entry, your stop loss, and then your TP, and you are good to go. Please, you need to watch this video more than once. Okay, you need to watch this video more than once. You can see another one here. So the strategy is pretty much simple and it is straightforward. Okay, at a structural point, price is piercing the lower Bollinger Band and is at a structural point. Remember, the structure, the trend is not out of it. And then indicator window 1, price is pierced, the histogram is at the level of 10, and then you can see our moving average and our stochastics doing the same thing we want to see. There is a cross between the stochastics, the moving average, and then the moving average is forming a curve, a cover for the stochastics. And after the price spike above moving average 10, we'll make our entry here. Our stop loss is at the previous low, because this low is taken, there is a break of structure still to the downside. Then our TP somewhere here. So this method is a bit simple and it is straightforward, so you are encouraged to watch this video more than once. In the next video, I don't intend this video to be long, so I'll be stopping now. In the subsequent video, I will be showing you the add-on of how to use the RSI and its number in order to double confirm our entries for the buying of boom 1000, boom 500, and boom 300. And I believe you are getting value from this video. Please do not forget to like, share this video, subscribe to our channel, turn on the notification bell so you'll be the first to get notified whenever we publish our subsequent video. And please share this video with your friends and loved ones. See you in the subsequent video where we'll be concluding on how to buy the boom 1000, boom 500, and boom 300 on a lower time frame, how we can scalp it, starting our analysis on the 50-minute time frame, and we'll be making our entries on the 1 minute time frame. Cheers, and see you in the next video.